So, good evening, folks. For the past few weeks, we have been talking about how to do the trading plan, how to do the trading plan, then how to do the various market setups. What are the different kinds of market accumulation, distribution, and what are the market laws? So we were talking about more about the psychology that is involved in trading, right? So today we are jumping back to the technicals, so that when you look at a particular chart, what the exercise behind this is, we want to make sure that you guys have some access to the charts, because this is very, very critical. I like all of you in this call to know how to fish rather than just getting the fish. That's not the intention, but you should learn. I mean, I'm not saying it's going to happen overnight, but at least when you look at it, hey, this is this kind of pattern, or this is kind of like how they do in the IT, right? This is the design pattern, that pattern. Similarly, we have a lot of patterns here. So without any ado, let's get started, folks. So first, I wanted to talk about, first, let's take care of the disclaimer. All the information presented in this video is only for educational purposes, guys. This information, you can use it for your investment purposes. However, you will be solely responsible for all the decisions, like evaluating the decisions and then making the trade. That's for all your buy, hold, and sell investment decisions. Okay. So having taken care of the disclaimer, let's talk about the agenda today. The agenda is, number one, what are trend lines? Why they're called trend lines and what are trend lines? The second one is how to draw a trend line. And the third is how not to draw a trend line. I mean, there are certain things that you need to do not to do when you do a trend line. Okay. The fourth one is called what is consolidation. If you had attended 2 weeks back, how to do trade setups in this market, we talked about 4 stages of the markets, right? That in one of the stages is called accumulation. So consolidation is nothing but accumulation, and it's like called another term for it is called market indecisiveness. Okay, so how that will be used? Then the technical patterns, we'll talk about a few patterns, how it is used, and then we'll look at the real charts to see how it looks. Okay, that's what it is. So this is what we are going to talk about today. So first, what are trend lines, folks? Trend lines is nothing. First, you have to understand. I've been telling this a lot of times. Maybe trend is your friend, right? They always say trend is your friend. You want to trade with the trend, but the key is to identify the trend. So some people, they say, hey, this is this is bullish, and they with their own preconceived notions. No, that's not what we are doing as a technical traders. We want to say, hey, we want to see the trend really happening. So how can we identify the trends? One of the way is, if there is a trend, you can draw a trend line. Okay. What does the trend line do? You see, if you look in your right, the picture, that is how the trend lines will look. So you know this is the trend line. That means it is forming a low, but it is within this range, right? So it is going up and up. This line will be trending up, and then it will forming a higher high and all those things. We'll look at it more in detail. Then what does this trend line do? It will provide the support and resistance for the trend. Here, the line drawn between the highs and the line drawn between the lows are both called trend lines. Now you know that this is the resistance for the trend line, and you know this is the support for the trend line, and support for the stock. The trend lines can act as resistance and support also. Okay, so that is one thing we wanted. So now, how to draw this trend line? So we know when the market is trending up, when you say, just this is normal terminology, whatever it is. When a market is trending, we always say it forms higher lows. That means if you draw a trend line, it will be inclining up. But however, it can also have a higher highs, but it may not be necessary. Still, it could be trending up, but it could also have a higher high. Then market trending down, you usually will have a lower highs, and it can also have lower lows, but you will see that it is going lower and lower and lower. So that means your trend line is declining. That means it is sloping down. That's what you'll see. So trend lines are always drawn between either the latest swing highs or swing lows. This is very, very critical, guys. You should not draw trend lines between some high and some low, some two different highs. It needs to be a swing high. What I meant by swing high is, it is very easy to explain with a chart. But for right now, understand that a swing high is a high that is formed at the top of a trend before it forms down. Okay, that means we call it as in the mountain terms, we call it as a crest. That means it is the highest crest available in that. That means it has crests surrounding it which are lower than it. Okay, that's what it is called, a crest. And then similarly on the lower side, we call it a trough. Trough is the one which is the lowest trough. In that, that means it has two troughs that are surrounding that trough. That's why it is called the lowest trough. Okay, but we'll look at more into the charts, but just wanted to give this thing. So for an uptrend, trend lines are drawn between the swing lows, usually incline up. That's what I was telling, right? Similarly, for the downtrend, this is what happened. Okay, now having done this, now there are certain rules, guys. So far we talked about how to draw the trend line, which we are going to look into more detail. But I wanted to say how not to draw trend lines. When you draw a trend line, it should not intersect the price bars. That means, like if you're drawing between 2 points, it should not be like, okay, it is intersecting some bars in between. Now, if you extend it, it can intersect, but it should not intersect in before that. Okay, we'll look at it in more detail when we talk. Then trend line should always be drawn between either swing highs or between swing lows. It should not be drawn between one swing high and another swing low, not like that. It should be only between swing highs or swing lows. Okay, now we prefer at least 3 points to connect, just like how we talk about flat lines. Flat line is nothing but a trend line which is flat. Okay, now at least 2 swing highs or 2 swing lows should be connected in a trend line. 3 is preferred usually. Okay, now let's take up some charts and see how these trend lines look. Okay, let's look at TTD, the one that we were like looking at it. I'm going to remove all the, what will you do? Shall we do IPOP? Let's see what happens in IPOP. Let me remove all these lines, guys. Okay, now when I draw the trend line, I know this is the high, but it formed today. So where was the first one? If I draw the trend line, I'm drawing between the swing high. Why this is swing high? Because it formed the highest high in the surrounding areas. So it went here and I drew this, right? Now, if you look at this, I am drawing between, I'm also considering the wick and I'm also going here. So this is the trend line. So basically this is one trend line. Now, if I want to draw the low, again, I can pick up here and I can see, you see that I didn't intersect any of the price bars here. If I draw the swing low, it is like here. So it is in a very tight range, right? Basically, it is ready to either shoot up or shoot down. So that is what it is, which we'll see more in the patterns. But for right now, this is how the trend lines are drawn, folks. You draw between a swing high and a swing low. If you look at here, it didn't intersect any of the price bars. But when I extended, it went and met this guy, basically. Okay. But the two connecting points never intersected with any price bars. Does that make sense, what I'm talking about here? Okay. So this is what is all, this is how you draw the trend line, folks. Now you can draw multiple trend lines. For example, you can say, hey, from here, let me say what happened. So if you see here, if you look at IPOP, when I drew this trend line, I drew these two lines, but it intersected. This is where IPOP became a big buy because it crossed this trend line and it went up. So it was consolidating above this trend line and it became big and it went up, right? So this is where people started buying IPOB. So I'm just giving you an example here. This is how you draw the trend lines, okay? And the other way to look at it is also, you can say here, this is a classic pennant pattern, which will look later. But what I'm saying is it broke out of this pattern and then it went up, okay? So you can draw multiple ways, but just follow the basic rules. Never intersect the price bars when you're connecting 2 points. Then number 2, always draw between the swing highs. Number 3, and don't combine and try to get at least 3 points if possible, okay? So now let's go back to our slide. So we talked about how not to draw trend lines, right? Then the next one is, this is a very, very important concept you need to understand, folks. What is consolidation? So when did this happen? Consolidation usually happens. What is consolidation? It means that the price is not moving much, but it is like accumulation or consolidation, whatever you call it. This happens after sharp price movements. So what do I mean by sharp price movement? For example, let's say the price shot up, like gapped up. Then what happens is, then you won't see the move. It might gap up for 1 or 2 days, and then you'll see it retracing back, and then it will consolidate. It will keep on consolidating. Then after some time it breaks out, okay? Depending upon what they want to do. So what this usually happens after sharp price movements, what is happening is the market is digesting the information and it is not able to make a decision what it needs to do. That's what they say, market indecisiveness. What are the characteristics in this consolidation? The stocks keep trading in a narrow range, okay? And they will have very low trading volumes. You won't see a lot of volume happening. Hey, what happened to this stock? It went up so much, but then now it has come back a little bit, but it is consolidating. That means it is in consolidation phase. That's why it will have very low trading volume. Then it will have steady support and resistance levels. What do I mean by that? When we drew the trend lines, the trend lines act as the support and the resistances. So it will trade in that range. So you know you know the support, you know the resistance. If you are a band trader or that kind of a trader, you can trade from the bottom to the top. On top of that also people do in that range. But it will be a very quick moves and you have to get out very fast and you have to be very nimble, okay? Now, if this is the case, how to trade this? People position for breakouts, guys. Breakout is one of the biggest patterns in the stocks chart, right? Like, what do I mean by breakout? That means we'll talk about different patterns where we'll talk about breakouts. Breakout is nothing but it will breaks out of the narrow range and it makes us move further, okay? That move is supposed to be most profitable move. Breakouts are considered to be the most profitable move that you can make in trading, okay? So what will happen during this consolidation phase? The big players are positioning for their next move. You will see that there will be slow accumulation. Daily they'll be buying some of the options they'll be buying. And then suddenly one day you will see they'll be buying millions of options and all those things. You will see these kind of things in unusual option activity, especially when it's consolidating, okay? This will happen even before earnings, folks. If the stock doesn't know what to do based on the earnings and all those things, then it will keep on consolidating and then it will break out during the earnings. So this also happens, okay? But today what we are going to do, we are going to look at some of the patterns and we can decide, we will see if we can decide if we can make a move, if we can decide what side the move is going to be based on the pattern, okay? That's what we are going to see. So based on the trend lines, right, there are different kind of patterns we can do for breakouts. One is triangles. What triangle means, it forms a triangular shape. We'll talk about it more. The second one is wedges. As the name implies, what we are saying is it will form a wedge kind of a pattern. Then we'll talk about the pennants, then the flags. The last four I'm not going to talk about, but these are also patterns which we use in daily life. A lot of people know this, I believe. Double bottoms, double bottom, triple bottom, double tops. We are not going to talk in detail, but if needed, we can do it. Then the heads and shoulders, inverse head and shoulders, which is like for bullish, same like then cup and handle, right? Which is a very popular pattern. All these are breakout patterns, guys. We can use them to our benefit, okay? But the one thing which is needed to use these patterns is patience. You need to be willing to wait for that breakout, okay? Because otherwise you will be inside the narrow range, and especially if you're trading options, you will be losing your premium, okay? So never, don't anticipate the breakout. Get an alert for breakout when it actually breaks out, and then do the trade, okay? It's worth it doing that way. Any questions, guys, so far? Okay, moving on. Okay, what are triangles? Triangle shape is formed when the trend lines are converging towards each other. Remember I said you have to draw, you can only draw the trend lines between higher highs and between the swing highs and the swing lows. If you see the first pattern, this is called as an ascending triangle. What happens here is you kind of have a flat line in the top. Remember I was telling you, when the market is in a bullish condition, the main condition is to have the higher lows, but the higher, it can either have higher highs or it could have a flat highs. That means it could have formed a double top, waiting for the breakout, or so those kind of things. So you have to be ready for that. So what happens is it may not be an inclined one, okay? But there's another pattern for it, which we'll talk about. But those are called flags. But in this case, in the ascending triangle, what will happen is you'll have a flat line on the swing highs, and you'll have this one. This is a very popular strategy, folks. Especially you might have seen this a lot of times. What happens is when it comes out of this triangle, you'll see a breakout and you'll see a rapid move. This we kind of happened recently in Curvo, all those kind of things. Then QRVO, Then descending triangle is also a very same pattern, but it is like to the downside. What will happen is you will have a flat line on the lows and a declining line on the highs. That means you are forming lower highs. Remember when I said when the trend is down, you will form lower highs. So this will lead to a breakout. And again, one more thing, all these triangles, they are called as continuation patterns. That means whatever pattern you had before, the same pattern will continue. There are two kinds of patterns in the market, guys. One is continuation pattern, one is and the second one is called the reversal pattern. That means it reverses the pattern in which it was doing before. So these are called continuation patterns, okay? Now the symmetric triangle is little different, but you can see it is also a continuation pattern. You see that it goes like this and it hits it here. So, but it forms a triangle. It's not like a flat line, okay? It's a symmetrical triangle. That means they are equally going towards each other. Maybe the angle is 60 degrees. I don't know, symmetry. It's not like equilateral or something, but symmetrical. So you will see that, and you'll see the breakouts and all those things, okay? Any questions on this? Okay. Guys, are you there or am I talking to myself? I just want to make sure.
No, we are there, Srini.
Okay, good. Okay, the next one is trend reversal patterns. These are called as the wedge patterns. Wedge pattern is a trend reversal pattern. That means whatever pattern, you had, that will be reversed, okay? For example, if you see here, it fell down and then it was going bullish. You see this, it is forming a higher lows. That means it's forming in an uptrend. But you see this is kind of flat, or it can be like going up. But what happened? It just dropped out of it. So when you see this kind of a pattern, this is a wedge, and you want to be extremely cautious. You're forming higher lows, but you're also forming this lower low, this thing, but it is going down. So this is a trend reversal patterns, folks. Similarly, the falling wedge, you see something falling down, and then it goes up, okay? So this is what, this is the opposite of triangles, okay? So whenever you see a wedge, you want to be a little bit cautious. It's not a continuation pattern, it's a trend reversal patterns, okay? Just wanted to bring that up.
A quick question, Srini, if you don't mind. Yeah, how do you differentiate ascending triangle versus rising wedge pattern? They look
Ascending
very
triangle
close.
usually, yeah, ascending triangle will be usually a flat line, basically. This kind of a line is a flat line, right? Basically. See, in the case
Okay.
of it will be like a, it will not be like a, if you see, if you can understand the shape of the wedge, right? See, this line is going up, higher highs and higher lows, and this one. This is like a wedge shape. Yeah, it is little difficult. I agree with you on that. If you are not looking into it, but the more and more you look, right, you see this pattern. First of all, it is going, when it is falling down, it fell, and then first of all look at this. This fell, right? Then why is it forming higher highs? You have to think about it, right? Then you are seeing that it's not forming a great higher lows or anything like that. It is just staying there. Now it is following this thing, but this trend is trying to form a higher highs. Whereas in the ascending, you are always having it is following the same direction. You see the direction from where it started?
Yeah. Okay. Got
That
it.
is what you need to watch out for.
Got it. Okay. Thanks.
So this one, it goes up and then it is going up. It is continuing, right? But in the case of a wedge, if you are having a confusion between ascending triangle and this one, you need to look at the direction where it started. And if it is forming higher height, then you want to be very cautious, right? That's what.
Yep.
Did I
That
answer your
explains.
question, Subara?
Yes. Yes. Thank you.
Yeah. So I know it's kind of challenging. Sometimes I do also make, I mean, it's like you have to take care of so many things, right? That's what it is.
Yeah. Yeah. The one what you explained, like where it started, starting point, I think that clarifies. So
Yeah.
yeah.
Yeah. So that is very, very important because that's why it's called trend reversal, basically. So you want to see that, right? Okay. So similarly, falling wedge, guys. Falling wedge is like you're forming lower lows, but still it is tending to go up, right? That's what it is. So basically, ascending triangles are higher lows are formed, but it is continuation pattern. That means the price was going up further first, and then it formed a higher low, and it was continuing that. Whereas a wedge is, it's falling down, and then it's forming a higher low, and then it's going down, right? That's what it is. Falling down, and then it is reversing, sorry. And then it is reversing, right? Yeah. Basically, if you see, right, this one and this one is the same direction. You see that? This starting point and this starting point are the same direction. Only in between you got, it kind of confuses you, right?
Yep.
So you have to watch out the whole pattern. It's not just this one, you have to watch the whole thing. Okay, yeah. All right, next one is flags, guys. Flags are also continuation patterns, okay? So always think about triangles, pennants, flags. These are all continuation patterns. Wedges are the only one which are trend reversal patterns, okay? It's, at least we should, if you can remember that way, you will be able to think through. When you see a picture, you'll say, okay, is this a wedge or is it a ascending triangle? You need to first make the decision first, okay? That's what it is. So flags continuation pattern usually formed after a rapid rise of the price or rapid downfall of the price. This is like, for example, as I mentioned, it goes in. Now look at this. The only difference here is it is forming a parallel lines. You see that? The parallel lines, and it is forming a lower lows here. And then it is hitting it up. But the key point here is the parallel lines, which is going here and it is coming here. It's a continuation pattern, but it gives you a little bit lower lows and then it goes up. Similarly, the bearish flag will give you a higher lows and then it goes down. But the key point here is that lines are kind of parallel. But there is another pattern which is called pennants. Pennants are very, very similar to flag. So whenever the price rises rapidly, they call this as a flagpole. The name it got is from the baseball field. where they have the flag set up, and that's what they are looking at this. So if you see here, it's a little different. It forms a triangle, but the direction is the same. It comes from the up, but look at this. It forms a higher lows because they are converging. They are converging. Whenever the line converges, you will at least have higher lows and lower highs, right? So when it goes here, it breaks out. This is bullish. This is very similar to ascending triangle in a way. I mean, only thing is this is not like parallel lines. Okay. Now the bearish is a bit different. You are coming from the top. You are forming again a higher highs, a higher lows, but you are having, and then it goes down. All the time, remember guys, you have to, when you're looking at the patterns, you have to look at the first direction also. Okay, that's what it is. If you look at this one and falling wedge are the same, right? Am I right? Am I right or no? Did I say? Yeah, falling wedge are the same. You see that? This is falling wedge pattern, right? It came from the bottom, then it formed, but it's forming lower. No, it's not the same. Sorry, guys. It's forming lower lows here, whereas here it is forming higher highs. Anyway, so what I'm trying to tell you, you don't have to remember this much, folks. What I'm trying to tell you is, let's now look at some of the real-time charts and see how we can identify these patterns. Okay, in that way, right? We can see. At least we should know whether it is in consolidation phase or whether it is getting out of the phase, those kind of things. Definitely you don't want to get stuck in the consolidation phase, right? That's what it is. Okay. So shall we look at some charts, folks? That's all I had in terms of theoretical here. Do you have any questions? The other patterns I didn't cover here. You want to cover them? Head and shoulders and all those?
Yeah, if you can cover like maybe at least a quick brief overview, that would be great, Srini.
Okay. I'll try to get a website where all the diagrams are there, so you will understand what it is. Okay. This is a very nice. I'm going to share something. This is a very nice website I found out. They have like 17 stock chart patterns all traders should know. From there only I got some of the diagrams. But if you look at this one, guys, head and shoulders. Okay, you wanted to, the other thing what you wanted, we talked about the flags, we talked about the pennant, then now this is the head and shoulders, folks. So this is the I'll forward you this website. If you want to follow each of the patterns, you can look at it, okay? Basically, head and shoulders is a very popular strategy. You will have an uptrend, then it falls back to the trend line, wherever you draw this, then it will form a higher high. Okay, now the higher high and it will come back. So basically it will have a crest here with the two, crest means I'm talking about really the top of the peak. That means you have two highs on the sides, okay? When you have this, that means you know it is not able to get past this guy. So you will see a downtrend, breakout and trend reversal will happen. Okay. Similarly, there is something called as inverse head and shoulders. This is very, very similar. This is for the bullish reverse, bullish patterns. You come from the downtrend, you hit the neckline, they call it a neckline, this trend line, and then it goes bottom, it forms a lowest low. That means it forms a trough, and then you do, and it intense it. So these are the patterns you should use. The head and shoulders will be very commonly used when you see long-term trends, right? For example, you may not see these in the trending markets, but if you see trending markets will be mostly flags, triangles and all those things. But these things you will see when you have a long-term bearish trends and all those kind of things. You want to see this pattern. Does that make sense what I'm saying?
Yep.
Okay.
One quick
I
question,
mean,
Srini.
this site is amazing. They give a very good description. I'll forward you this to all of you. But this has everything, a triple top reversal. These are the 17 patterns you should look at, okay, basically.
I think cup and handle and double and triple bottom will be good too.
Okay, sure. Cup and handle is it's like a rounding bottom pattern. Yeah, this is the cup and handle. Okay. So you see what will happen is basically, this is like, it will look, when you see this pattern, right, if you draw around it, it will look like a cup, basically. And this is the downtrend, and you will see a cup, and then this will be your handle, basically. That's what they're saying. Again, you should have an eye for these folks. You cannot, the more you look at the charts, you will be able to identify this. Even for me, cup and handle, sometimes I miss it. I can look at the inverse shoulders. But what I'm saying is you need to start looking for these patterns, right? What I meant is, when you have these patterns in your mind, and then when you look at the charts, it will all show up for you. Like, oh, this is cup and handle. This is why it went up. You will be able to tell that. But again, understand, these are telling you that it is a trend. But again, you cannot just trade with that, right? Again, you don't know what is the upper part of it and lower. You have to be very careful in trading. For stockholders, for stocks, it's okay. It works well. But you want to know how much will be the move and all those things. So for me, the biggest thing is trend lines breaking up. That is the bullish flags, pennants, triangles. These are the bigger moves that will breakouts. These are all breakouts. This is also a breakout pattern, right? Basically, you're breaking it out. So, but you have to have an eye for this. And this is the move you want to play. When you see this, if you see this breakout, you should play this move. Okay? Makes sense what I'm saying? This cup and hand, basically, this will not look like a cup when you look in the thing. But if you can have a very, what do you call it? What view? I don't know what to call that. But you should have that view of visualizing it as a cup and then taking it in. Okay? That's what it is. So that's it, guys. And then the triple top reversal, all those things. If you form a triple top, that means the market is not willing to go. So right now, dear, we are seeing this basically. Let's see if it wants to form triple top or it wants to go up. That's what we are saying. We'll see now what are one of the patterns. Okay? All right. So let me forward this site for everyone. This has everything. I'll put it in the chat so that you can take a look at it. Okay. All right. So let's look at some charts, folks. Any particular charts that you want to look at?
Should you pull up like Amazon is probably consolidating?
Amazon. Device on Amazon today. Okay, let me remove all the lines first. There's too many lines. The charts are always crowded, guys. Okay. So let's see. Where is if I draw this line and this line, just extending it, folks. It hasn't yet broken the trend line. Basically, it has not come to the top. And that when that happens, what is going to happen? It's also going to get out of the cloud.
Yeah, breakout is above 3190.
Yeah, that's what I'm saying. The cloud, both of them will happen at the same time, I think. But the good news is, it is like here. It is like here. So today it formed, it went and it came out of, so it is in the strength. So, and this is converging very soon, right? So now look at this, folks. What is happening? He's coming from the top, right? Now what is happening? Is he forming a higher low or a lower low? Can you see?
Looks like higher lows, right?
Yep.
Right. So what is it happening?
Like a wedge.
Yeah, it looks like a wedge. So for me, it looks like another downtrend coming down. You know what I mean? So good, Diva, good eyes. That's what I wanted to see. So it looks like a wedge for us, right? It looks like a, what is this, falling wedge or a rising wedge? A rising wedge. Let us pull that. Yeah. So that's what I'm saying. So you got to be, so you, this is what I want to see. See, you are forming the lows, and if I connect these two lows, it is still lower than this, but today it went up than this. So we don't know. So if you are not even sure about all these things, one thing you want to be really sure before entering is don't enter this trade within these wedges or triangles. Enter only when it breaks out. Okay. Are you getting my point, Diva? Everyone? So don't enter this trade saying, hey, this is bullish. So no, but there is an upper resistance here. You want that line to break up. I'll show you an example how we traded before on this. Curvo, when we traded, what did we do? Hold on. How did I trade? Look at this. Here, I drew this line, right? This line. Are you seeing this line, folks?
Yeah.
This line, it broke through this line. Then I knew it is going to go to it is breaking out of that thing. So you want to see a clear breakout. That's all I'm trying to say. So don't do anything without a clear breakouts. Okay.
Now, Srini, on the Amazon, if you do the Fibonacci, I mean, it's been consolidating for a while, and if it's a wedge and
no, I'm not
higher.
aware. Let me see. Wait a minute to answer your question, right? What is a wedge? Let's go back here. This is the rising wedge pattern, right? It came down,
Right.
it went in, it's going here, and it's coming here, right? So
Yeah.
this looks like a rising wedge pattern because it started from the top, right?
Mm-hmm.
So, but if you draw the Fibonacci, it is at the 25% retracement. Yeah, it can go here, basically. This is what 3422. If it is going there. Yeah, it was long time due, right? To go to 3,400. Yeah. Okay. But again, these wedges and this one, I wouldn't recommend so much because, but look for the breakout, folks. That's all I'm trying to say.
Yeah. A breakout would be the confirmation. Otherwise, it's sort of like
Yeah, if you
you're
don't get,
playing, you're
because
coining.
this depends upon from where you're looking at and all those kind of things, right? So it is very relative. Though it may be in a downtrend, it may fall from 3,400 and then it will do that. But what I'm saying is look for the breakout. Don't do it before that. Okay, that's what I would suggest. Yeah, so Amazon is answered, right? We want to get up beyond this line, which is a 3,000. What is the lead span B? Is that 3211? That is the point where you want to enter for. And the first point of entry will be 3,306, which it has never touched. Then it will fall a bit, and then it will go. Yeah.
How is Lulu?
Lulu. Okay, Lulu is a really uptrend, beautiful chart. If you see here, I drew a line in this one, and it is going to 400 folks, basically, but it has time. That is the reason why when I mentioned it, I said we're buying January calls, basically. I wanted to get in the move.
I have calls expiring next week. And my target is 378.
378. 1, 2, 3, 4, 5, 6, 7, 8 week. It fell for 8 days. 378. Little challenging. Is there a way that you can 1, 2, 3, 4, 5? You want to? Is there a way you can roll it out? Which calls is it?
Next week. Next week 360 calls.
Can you roll it to 400 for cheaper? Next for the future dates?
Yeah, I can.
Think about it.
I mean, what are you seeing here?
You saw the trend line, right? The trend line is good. But what I'm saying is I'm counting this number of days. It fell. So I want to give that at least that number of days to get to the 87.5% retracement. So which may not be, you said next week, right? Not this week.
Not this week, next week.
Next week, it should be possible if there is an uptrend. Guys, as I mentioned, yesterday I was mentioning to some of the folks, this is one thing I wanted to mention, which I don't usually mention to anyone. If you look at the Fibonacci, if you look at the Ichimoku, right, you see this in the future, it is so bullish. The lead span A went up above the lead span B. So for me, it looks like the SPY seems to be very bullish unless it shows some other signals. Because if you see here, the lagging span is over this thing. And also this lead span A went over the lead span B. But here it is also, what is the conversion now? 367.15 and it closed at 365.35. Yeah, it is having some resistances here to go above this. But if you take at NASDAQ also closed below this. Huh? Oh, okay, I didn't see. NASDAQ closed above the conversion, but closed below the, oh, but this is post-market. Let me take yeah, it closed below the moving average 10. So something is going on, folks, with the shutdowns, with the COVID shutdowns that's happening. But if you see here, here also it's looking very bullish. So for me, that's a good sign. If you're playing long term, don't panic. We might be having some bullish signal. That's all I wanted to say. Okay, which are the charts you wanted to see?
I'm actually in Lulu and Neo right now.
Lulu, we saw, right? What else?
Neo.
Neo. Oh, sorry. Why am I talking here? Neo looked very bullish when we entered here. This was the price pair range we are looking at. But what happened here is, the sad part is, it broke through the bottom line.
Yeah.
That is the sad part. When we entered, it crossed through this and it went in, and this one. But if you see here, it is like really below the lower part. That means it's becoming little bearish, right? That's what it is.
Srini, is Neo not head and shoulders?
Is Neo not head and shoulders? Let me look. 1, 2, 3. Yes, it is. And that's what happened, right? That's why it is going down. Is that what you're asking me?
Yeah, that's what I think that's a bearish signal, right? It looks.
Good. Yeah, that's what I'm saying.
Looks like.
Yeah. You're right, actually. But yeah, that's right. That is what it became bearish. If you see here, this one and this one, you're right, exactly right, Bharat. If you see here, it has a bearish. It had a trough, but it had formed a higher, and then it formed it, and it went low. Very right, very nice. Yeah, that's correct.
Actually, this is debatable because see, you can, if you draw a flat, if you draw the trend line, it is a flat line, and you can see that it is trying to form an ascending triangle.
Where?
See, the trend line that you drew, it is flat. Actually, you did not. You can draw it a little more down because you did not connect the. You did not connect the lower.
No. See, that is what I'm saying, right? The problem is, see, the problem we are having in this market, right? Everybody's time frames are different. So, Bharat, for you, head and shoulders, the time frame is like, okay, what are you saying? Where is the flat line? What are you, see, you should not intersect, right? When you're drawing the trend line, you know that.
No, I did not intersect it.
Okay. This is the only trend line I see in the top. Is that right?
1 second. I'm opening my chart. No, not the top, the bottom one. It hasn't broken the.
What would you draw from here to here, right? Max.
Oh, you are drawing like this?
I'm just extending it, but this is the trend line, right? No, not that one. This one, yeah. This is the trend line. So it broke through that.
Okay.
Right?
I just drew it differently.
No, what I'm saying is it should not touch any of the price bars. You are talking about flat lines, I believe.
No, I was looking at trend line only, but I have it drawn from a long time back.
From where?
From...
What is the date? But that's a good point, Bharat. It's a head and shoulders. Yeah, that's right. If you can, that's what, guys, if you can identify these patterns, and if you can, it will save you a lot of effort in getting into that. Yeah. Anything else? So Neo, yeah, that's why it is going down.
I drew from November 10th.
November 10th, where is November 10th? You went too far here, right? November, no, here.
Yeah.
From here to?
Where's
the next swing high? Where is the next swing low?
This one, the one that you connected recently, the green one.
Like this?
Yeah, I have it like that.
Okay. I mean, you're right. Basically, the thing is, this is right. I'm not denying it. But what I'm trying to tell is there is a one before this also, right? You want to get to the latest ones, right? First.
One before one was this one.
No,
right?
The one I'm saying is if you're taking from right to left, the chart, you want to take the latest trend lines, right? So that you can quickly get your this thing right.
Yeah, I thought this was the latest. I mean,
no, why can't it be?
But that isn't that. I thought that is not a lower low.
Oh, it is not a lower low? Okay.
Yeah, it is not a lower low.
42, 41. And what is this? Yeah, you're right. 41.65. Okay. Okay. But it is diverging, right? That's what you're saying.
Yeah, it is, but it has not broken the 10 rate, so I'm still in it. I mean, from what I drew, I'm not sure if. Right.
Okay. Yeah, that's good. Yeah. Good. Yeah. What I'm saying,
Srini,
you can draw it. Yeah, you go ahead.
Srini, a question. Okay, I see this trend lines. Okay, but what about a positive or negative news for that company? Okay, how much does it impact the behavior?
So good question, Nishit. Nishit, think about it like this, right? The news comes, right? The news comes. Now, have you seen this sometimes, Nishit? The earnings are so bad, right? Now, but the stock keeps going up. Why is that? Or if the news comes and the stock did exceptionally well, but the stock falls. Have you seen that?
Yeah.
Why does that happen? The reason being is everything is determined. So what I'm saying is we are not driving. See, our goal here is to trade based on the price action. Okay, which is how you get faster. Trading based on price action will give you faster results than waiting for the news, right? Let's say if you're, if now, as he said, now Bharat was saying, if we knew that this was head and shoulders, and we all, at least I didn't recognize that, I entered it here and I lost money. Okay. Now, if he recognized this head and shoulders pattern, he wouldn't have even entered this trade.
Yeah.
So it is, and again, it is all subjective also. Now, if you are entering a head and shoulders, if you are looking for like a big move, then it is not possible. But let's say if for me, if I enter here and I'm just looking for a quick scalping move, maybe $1 or $2. It went up though. From here, it went to 48.30 or something like that. And then it fell. But we made 50% profit on it. Like whether we sold it or not is a different matter. But we made 50% profit on it. We could have sold it at that point of time. You know what I mean? So It all depends on what is your criteria in that trade. What are you looking for in that trade? You should have a clear cut, more than all this, you should have a clear plan of how much you want out of the trade and what is your position sizing for that trade. Did I answer your question, Nisha?
Yeah, you did.
So there are so many factors because people look at different things, right? People trade in different ways, right? So, but what do you want out of the trade? That is the question. For example, let me tell you now, Tarun, right? He played Lulu for next week calls, and I am playing for January calls. For me, the pressure is very, very less. But for him, he wants to make sure that the price reaches 370 or he has to take some action on it, right? So there is it's all relatively, right? That's what it is.
Yep.
Yeah. Okay. So other things.
Nishit, sorry, Srini, but to Nishit's question, like let's say a news comes on Neo tomorrow, right? Right, which either cause a major upward move or a major downward move, right? Like if US delist Chinese stocks from exchanges, that's going to have a big impact on all Chinese stocks, right? Or if they strike a deal with some big thing and have a major order, but that will show up. I mean, we may not be able to catch that news, but it'll show up in the day chart, right?
Yes.
Whether as a breakout or gap up, gap down, right? And then you can take action. So even though you didn't get to the lower, you didn't buy at the lowest price, but that's okay. You know the trend, and then you can take action.
For example, Nishit, when suppose tomorrow Neo came up with some bad news, I'm just giving a hypothetical example here. So what might happen is it might break through this trend line, and then what happens is if you have attended Ichimoku, if it wants to become bearish more, it will cross the cloud, it will go down. So now it is looking very bearish on a daily basis. Did I answer your question, Nishit, or no? Yes. Nishit?
Yeah, Srini. Yeah, I got it.
Okay.
Actually, I'm just chipping in here. This is not a head and shoulder. Like how we are. This current scenario is not head and shoulder.
Why?
Because head and shoulder usually forms when there is a high, but it is less than the previous high.
Yeah.
Here, where do you see?
Right? This is the high.
Yeah, where is the right shoulder
24.
Here? There isn't a right shoulder here.
Yeah, right shoulder is 54.20.
No, that is a left shoulder.
How much is this? 54 close, right?
But that is not a high, right?
39.
See, that is not a high to form a right shoulder.
Oh, you're saying this is the high, right?
Yeah, that may be considered, but
no, it won't be perfect, Tarun. Basically, it is like if you go to the line chart, if you see, this is how you look. Okay, what is happening here? But yeah, it's not see, if I draw a line between these two, it looks perfect. You see that?
Where? No, I still don't see it. I mean, like, I see a left shoulder, but I don't see a right shoulder.
I'm not going to. These two are the lines, right? These are the shoulders. Anyway, I mean, what I'm trying to tell is for the naked eye, it looks like a head and shoulders. You don't look to that extent, right? That's what I'm saying.
Arun, you should chat with Chandan and
don't worry about
reconcile. You have a good point.
Let's move on and let's look at something else. Anything else, folks, that you want to look at? It's already top of the hour, but anything else?
Hey.
Huh?
Srini is here.
Which one? Which one?
Hey, actually, your voice is not audible.
Yeah.
Pennant or a flag or something else.
I don't think Chandan, we can't hear you, man.
You. Okay.
He was Srini. He texted. He was asking about Palantir.
Oh, Palantir. Wow, Palantir crossed. Okay. This is nice. Okay. Palantir, this is the line we can draw from here to here. Okay. And from where to where? What is the low here? 25.33. Then we have 25.15. So we can draw from here to here. Okay. So it is very close to basically it has gone up, then it's falling down, then the higher high. It looks like a triangle and it might break out, guys, basically to upside. Let's see where it breaks out. But it is getting closer to a breakout. That's all I can say.
How is it on the Ichimoku?
Ichimoku is way down, man. It's here. So thin.
Oh, wow. Yeah, this one is definitely bullish. I mean, if everything goes as...
But again, if you look at the conversion, yeah, it is above the conversion. It is above the average 10. So it is looking very, very bullish, actually.
Mm-hmm.
Yeah. Those are the other things you can use, right? Your average, you can use your other factors like Ichimoku, moving averages, and all those things also. Yeah.
This is above moving average, right?
It is above moving average 10.
Yeah.
Mm-hmm.
So Srini, would you be advising us to put some calls?
No, not right now. Basically, I want to see, as I said again, I don't want to be in this thing. What will happen is usually when it gets out of this thing, right, it will make a move and then it will come back. That is when, for example, today there was one thing called STRL. You see this? Which made a very big move today. But I expect this guy to come back here so that I can enter for the next move. It broke out of this trend line. You know what I'm saying?
Now, Srini, just to Nishit's question though, I think I don't know if this initially, if Srini, if Palantir as a long-term buy stock is a good, you can enter now. But what Srini is saying, if you do option, what time frame are you going to give, right? Because it can consolidate and eventually take some time to break out. So maybe that's where Srini is looking for another signal, which confirms the upward projection move, potential upward move, and then get into a call. I don't know. Srini, could that be a strategy? Like buy a stock long term, a little bit, and then wait for the next signal for the option?
You can do, if you're, one way to do this is, right, again, what you can do is if you are like, if you're not short of cash or anything like that, you can, if you are bullish on the stock, if you see all these Ichimoku signals, right, the first thing I would look at is the weekly signals. The weekly signals are very, very bullish on Palantir, right? So what I'm saying is you can enter the stock and then you can keep it and then you can add options as you see.
Yep.
Yeah.
So see, one thing, folks, I always tell the best way to look at it is very simple, guys. If you are long-term bullish, go to weekly charts, look at all these conversions, like those things. Same concept, Ichimoku, right? Look at like conversion, the moving average is 10, and all those things. Put your if it is above this, put your stuff, and then put your stop below moving average 20. Or something, right? So that you need to have something in place. So basically, and keep moving it, as in keep moving the stop along with the moving average 20, so that you are not like getting out for the breakout of moving average 10, but if it touches your moving average 20 or the 50, whatever, how conservative or how aggressive you are, depending upon that. For example, I'll tell you, people who have played Spice, if you see here, folks, the best entry point is like you should have bought it somewhere when it broke over the moving average 10 here. Somewhere it broke, right? Where is it? Yeah, here. Somewhere I'm showing you the line charts. Let me look at the weekly charts. So the line charts, sorry, too much. This thing will be always crowded because of all these things, but it may not be clear for you. But okay. If you look here, folks, the conversion line is at 1965, right? So then the conversion line is at 1965, and then the MA10 was at 1863. So the price here was 1903. If you had bought it here, you would be still riding here. And then if your moving average 20 is somewhere, what? Where is it? Moving average 20 is at 2087. So you are still holding on to it, basically, but you took all this profit. So you can keep modifying this if you want, move along with the moving average 10 or whatever. But I would recommend to go with moving average 20 because 10, it can flip flop according to the market on the weekly charts.
Yeah, but my question is, why would you buy that there? Because it was below the cloud, and even after some time it's in the cloud.
Okay, yeah, that is true. You're right. Which is below the cloud. I gave a bad
Like do like a
example.
trailing, right?
Yeah, what I'm saying is here you mean.
Yeah, there you could buy.
Yeah. Yeah. Any stock, guys. If you want to play stocks, it's very easy. It's much more easier than options. Use these techniques for both of them. What I would highly recommend is have two accounts. See, and that also tells you folks about yourself. What kind of a trader are you? Are you long-term holders, or like, how can you play options? You can compare both your accounts and you can do those kind of things if you have two accounts. Make sense, guys? Yeah.
Yep, and PLTR, once again, if you open PLTR, can you open?
Yeah. In the weekly or daily?
Daily. This thing, if you see 78.6, it is at 29.09.
What is 29.09?
78.6 retracement level.
It's at 25, right?
78. Okay, 87.5 in yours.
Yeah. I mean,
It started at 37.5. So it can go to 87.5, which is 29.09. So why can't we play till there?
why can't I?
Why can't we play till 29.09? I mean, why can't we play for a move?
You can play, but usually in the wedges, the time is the factor, guys, in options. I mean, I'm not telling you cannot play, but can you measure the time? That's what I'm asking.
Okay.
So you don't want to play. See, for me, if I'm playing options, it has to move fast, and I have to get my value back fast, right? If you are using just the price thing, and then you are not worrying about the time, there are a lot of times when the premium gets killed, right?
Okay. So it fell for 4 days, 4 times 2.6 is what
No,
I'm checking.
that calculations and all are good only if you are out of the wedge and all those things. But if you are consolidating, once you are in a wedge and all those things, there's a lot of consolidation happening, right?
Okay.
I mean, those are all approximations. We have to come up with some value, so we are coming up with it. But that doesn't mean that it is going to do that, right? It depends upon what the market is thinking and all those things. Yeah. So the best is the weekly GAN fans and see if you have availability. But how do you know, even if you do all the calculations correct, where is it going to? Right? That is the problem with that. We can only predict short-term moves, but you cannot predict where ultimately it is going to, right?
Yeah.
Yeah. Okay. So that's pretty much, folks, what we wanted to share today. Yeah.
Hey, Srini.
Uh-huh.
Ram and his buddy were gonna join. They were interested. My bad. I should have sent them the link earlier.
Oh,
But
okay.
he's a stock trader, and I think you gave some really good examples on how you can apply these strategies for stock as well.
Mm-hmm.
And so if you hang in for a little bit, I'll ask him to join.
Sure. Mm-hmm.
Okay. Hey, rest of the guys, appreciate you all joining and asking really good questions. And let us know if we can help in any way, or if Srini can help in any way. And if you have friends or other folks that you think could benefit from this service, ask them to join. A bunch of free insights on the blog, or if you want option picks, we can get that also.
Thank you, folks. Thank you,
Thanks, guys.
Bharat, Tarun, Chandan, everyone.
Yeah. Thank you.
Thanks.